think Santiago was asking who basically ARF is serving.
Yeah, go ahead, please.
Yeah. I can also go on with this. Like, the use case is solely based on cross-border payments is a decentralized
I think there
network.
was some problems in the connection, Santiago, that voices were cutting off. Kazim, Ali, are you able to hear us and answer Santiago's question about who exactly ARF is serving?
I was able to hear Kazim. Kazim, do you mind jumping in?
Sure. Of course. Basically, ARF is exclusively serving licensed financial institutions in cross-border, which means these might be the basic use cases remittance companies, right? There are people all around the world basically trying to send money home. And cross-border financial institutions are helping those. Basically, Remitly, World Remits, Wise, and basically MoneyGrams and Western Unions are the best-known brands on this. In the end, ARF is exclusively serving these licensed financial institutions, and we are helping. We are providing liquidity, which is basically the main asset for them to grow. So we provide short-term liquidity, so very short-term, 1 to 5 days. In digital assets, we are utilizing stablecoin, and with that, basically these institutions are able to grow volumes in their corridors that they operate, and they are able to expand other markets too. As a basic answer.
Yeah, one way I like to describe this is if you think about Visa today or MasterCard, it's a massive pre-funding network for hundreds of thousands of merchants to settle with their clients. And they're acquiring banks providing liquidity into this network, which is seemingly a very deep liquid network. However, Visa and MasterCard you can use for these kind of large financial institution transactions. That's why these guys have thousands of people employed, managing thousands of accounts around the world, around the clock, and there's so many problems with these cross-border payments happening. And if you think about, what is the financial infrastructure that's most suitable for building the largest pre-funding network for these large institutions, that's blockchain, that's stable coins. And you can think about this as the, Visa and MasterCard akin pre-funding network, but for large financial institutions to be able to, plug in where liquid doesn't only come from, the banks and maybe not coming from banks initially at all, but it's coming from all different sources on chain and they're able to utilize it wherever they are in the world.
Got it. I just rejoined, guys. I don't know if you can hear me better now.
Much better.
Yes, we can. Yes.
Okay, great. Amazing. Sorry about that. Yeah, well, I heard you say there, kind of the gap you're filling. What in terms of the merger and what do you anticipate? Obviously, everyone's talking about payments or real world assets. We recently had Stripe announce that they were going to support USDC payments. I think that's a huge step forward for the industry. Hopefully it's more credible than the round of announcements we see every cycle, but they don't amount to much. But what are you guys most focused on? Where do you see the most amount of opportunity in this kind of cross-border payment area that you're tackling?
I'll take it in the absence of any other takers. Please jump wherever you want, guys. But there are, I think, a couple of areas. Santiago, I was very excited to see the news from Stripe a few days ago that they are going to be accepting payments in USDC, which means they are very comfortable dealing with the regulatory compliance aspects of it, being a one of the largest private financial institutions in the United States. But also it means that they're actually seeing a lot of new payment opportunities coming up to their network as they start utilizing stablecoins, right? There's no reason for Stripe to threaten their existing relationships unless they see a lot of new use cases and a lot of new usage that wasn't possible before in areas around the world where such networks in payment rails aren't as mature. So I think that's one of the areas that's super exciting, and creates a use case for stablecoins that we believe is going to start transitioning more payment use cases over. The second thing is, even though ARFIS today, as we said, is offering services to financial institutions, and these institutions has massive amount of treasury operations that they are willing to move over because doing it over fiat is just so much burden. And we're talking about even the small ones doing billions of dollars, mid-sized ones doing tens of billions of dollars, and large-sized ones are doing hundreds of billions of dollars of transactions annually. And just serving a few hundreds of those, you can imagine you creating, close to $1 trillion network volume, just settling, between these institutions. But it doesn't end there, right? Because once they adopt, there's a network effect. Their partners adopt, their partners in all these different jurisdictions adopt, their FX partners adopt. So there's a lot of new layers to be built. And as you know better than me, crypto loves also speculative aspects of things. And once you start introducing effects, you can think about a mix of new CBDCs, new stable coins, packed different type of fiat as well as FX markets. This can actually create very new, exciting opportunities in the blockchain ecosystems as well. And we're just excited to be enabling just the first and the second layer of those, while we foresee new licenses around the world and new entities around the world to enable us to serve the large merchants who are also trying to do cross-border payments, and eventually get to a point where we might actually even serve the end users as well.
I just want to add that ARF recently surpassed 1 billion, and as Santiago correctly pointed out, it's just a drop in the ocean. And even the conservative estimates is $4 trillion is locked all around the world to make cross-border payments happen. And our merged entity, slowly but surely, is going to liquidate a good portion of it, hopefully.
And maybe I think one of the best ways to conceptualize how important this is and why it would get traction is if you compare it to the existing system, and in terms of cost, in terms of time to settle, or just unavailability of credit or just service. Can you give us a sense of, because a lot of times in crypto we talk about, look, there's existing players and it's a huge market, so we're going to either replace that or capture some of that market. But other parts of crypto you're just maybe going to service entire parts of the market that have been neglected because the existing financial system is just very slow, it's antiquated, therefore you can't really service perhaps all of the addressable market out there. How do you think about the market opportunity at hand? And a lot of that, I think I appreciate, is tied to regulation to some extent, because in some jurisdictions, as you mentioned, it requires you to get a license, and that is a very cumbersome process that falls out of your control. But I'm more interested in how you think about the market that you're attacking, and ultimately the customer that you're servicing. What is he using today, and why is he deciding to kind of work with you guys, so to speak, if that makes sense?
I can give you an example, the use case in ARF we currently facilitate.
Ali, Kazim, one of you want to take this?
Can't you hear Ali Arhat? I hear Ali Arhat, but I think he's speaking. No?
Yeah, I can
okay.
hear him, okay.
I cannot, but it's okay. Okay. Please continue.
Okay. So today we are facilitating settlements for 800 kiosks in the UK. They are also Western MoneyGram kiosks, but they're also independent licensed financial institutions, and they are dealing with cash. Especially, you can imagine today's work, everyday's work is like when a consumer comes and wants to send the money, they deposit it with cash, and then gives an order to, it's a transaction, cross-border transaction order or a remittance order to be sent, let's say, to a corridor to their families. And after that, all that transactions are sent immediately to the partners of the current financial institutions or kiosks to be made to pay out same day. But in order to do that, they need to have the money there, the pre-funded amount that we talk about $4 trillion locked pre-funded accounts. But you can also imagine the mechanics of it, like every day an armored truck goes to 800 kiosks, travels, collects the money, goes to the digitization center, and counts the money, puts it into a bank account, and then the money is digitized. And then they are able to get an FX for the pound to USD and then send it to their partner via SWIFT. So this whole process takes 3 to 4 days. So they start working with us, and when a user comes, a consumer comes and deposits the money and creates the order, they instantly ping us with that information or in some hourly fashion. And then we check the transactions and credit the transactions by sending it to their partner in the corridor, let's say in Southeast Asia, in some corridor. And their partner instantly settled with that capital in USDC right now. So they know it's on chain. They know the money is there. It's irreversible. They don't need any third party to confirm the money arrived. And with that comfort, you can say, the payout partners in Southeast Asia, they can make the payouts from their local currency, local treasury in seconds. They start making payouts of those transaction orders we credited. We provided the liquidity. So in that sense, normally it's a very hard to get growth working capital, especially for financial institutions. It takes 6 to 12 months to prove that you are growing, and then you need the money, and then you put that money in use, and then see that that's generating results. Instead of that, we can instantly help them settle. So with their partners, and they can repay us in 3 to 5 days in that armored truck use case. But here you see it's like not always a speed and cost efficiency, but also it can open up a whole new market which is not possible before. That's why it's very important for us, because you cannot really make the settlements same day or even instant with fiat money. So it's only possible with the blockchain and stablecoins innovation, and in of course in addition to the regulation that regulates them.
Yeah, I think maybe folks in crypto, or if you haven't run a business that you're dealing with like international payments or customers, like it's a huge royal pain in the ass, both from a working capital perspective, counterparty perspective. These businesses really like struggle to get paid. Like if you're not getting paid instantaneous, it's really hard, like from a financing standpoint, in places where you can't easily get credit. So like I'm hearing you say when you're interacting with in this network, like you're a stablecoin, you're minimizing one counterparty risk, and you have like certain certainty that funds will arrive. And more importantly, from a working capital standpoint, you're really not having to wait. Like you have the funds, faster. And that's really meaningful for anyone that's doing just, commerce, especially cross border, where really finance starts to break, right?
Of course. So you can imagine. I mean, I got those kind of questions a lot. So in a way, in a fashion that, where there are stable coins, why there is a use case for you, kind of questions. But you should always think about in those discussions, like, you should first on-ramp a stable coin from fiat, and then have it in your treasury, have some people manage the custody, and then get an FX rate, and then you can send it for settle. So even though stablecoin settlements are instant, obtaining and settling and getting to full confirmation of it still takes several hours or more sometimes, depending on the geography you base in. But yeah, you are